is the Demystifying Crypto and Building Wealth podcast.
I knew that would be worth trillions.
That had never existed in human history. There's been massive opportunities.
The #1 podcast to help you understand and get insights into the crypto world, blockchain technology, wealth building, and financial investing. Now, here's your host, Tico Tawari, the world's #1 most trusted cryptocurrency analyst and Wall Street veteran with decades of experience in the financial space.
Hello, friends, and welcome. Big T here to talk about what's going on in the crypto markets. And excited to have a chat with everybody today. First things I want to say for anybody who is in the pathway of this hurricane, my thoughts and prayers are with you, and I hope that you and your family are in a safe place or safely out of the path of what looks like to be just a terrible storm. Okay, so let's get to it. So, friends, at this point in the cycle, where we are in the year of the actual halving, a lot of boredom comes in, a lot of fear comes in, and really a lot of nonsense. You will see people that are, at least say they're very good at reading charts that will say things like, Bitcoin is under distribution, or Bitcoin has already peaked, the top is in, or the Fibonacci is saying this, or this one is saying that. And technical analysis has its place, and it certainly has value. But when it comes to something like Bitcoin or any asset that is on a long path of technological adoption, technical analysis can really impoverish you because it can be great over the short term, but terrible over the long term. And so if you're going to use technical analysis in Bitcoin or in any crypto asset, you want to use it for the part of your stack that is short-term in nature, for the short-term stack, the trading stack, not for your long-term piece. Because in order to capture the long-term gain in an asset, specifically in technology, so whether we're talking about Bitcoin, Amazon, Microsoft, Netflix, Google, Facebook, these assets will see price movements that on the chart will look like that the asset has died and can never come back. That is a hallmark of an asset that is not easily understood at scale. The more an asset and an asset's price is understood at scale, the less volatile it becomes, and then generally it's much more valuable than when it's not easily understood. Now we are at this point, most of us here, at least on this IG Live, and are what I would consider crypto natives. This is not our first bull market, or it's not our first bear market that we've ever been through. So we are very familiar with the asset and very familiar with how the asset moves. That is not true for the new group of people that are coming into Bitcoin and that are coming into crypto assets for the first time. They are dealing with this level of volatility and boredom. That's what you deal with Bitcoin. You deal with volatility and boredom. They bounce back and forth. They're dealing with it for the first time. And that plays out in the price, which is very often detached from the long-term fundamental driver of the value. And remember, when it comes to technology, the value is driven by adoption and utility. And a lot of people will say, well, okay, Bitcoin doesn't have utility. I would argue against that Bitcoin has incredible utility in the sense that it is a way to store value that is leak-proof. You can store value through time in a leak-proof fashion. And there are many other things that Bitcoin does, but I want to specifically talk about that because that is an area that I think will attract an enormous amount of investment from very wealthy individuals and corporations. What do I mean when I say that? Any asset that you look at, just about any asset, is not leak-proof. What I mean is, if I buy a piece of real estate and I hold it for 50 years, it's constantly leaking value in the form of taxes and maintenance costs. If you hold a piece of artwork over 50 years, sure, it doesn't leak value because it's a unique piece of art, but people's perceptions of what is a valuable piece of art can shift over time. In 50 years, that art may not be as appreciated as it is today. You have, collectible watches or collectible cars suffer from the same problem. Cars more so because cars have an ongoing cost. You have to pay to insure them and you have to maintain them. So this idea of leak-proof value that will have value across time is a problem that wealthy people have struggled with, not recently, but for centuries. So typically they've used gold and they've used diamonds. Now, if you've used diamonds to hold your wealth, guess what? Now we have lab-grown diamonds. That has just destroyed the value of many, many, many diamonds. Gold still has value, but gold has a problem with portability. It's very difficult. I think, what's $10 million worth of gold weigh? I don't know, hundreds of pounds? Hundreds and hundreds of pounds. You don't have portability. So Bitcoin solves many, many problems. And what I believe is that over time, if you can get the adoption story right, the price you pay doesn't really matter because we're so early in the adoption cycle. Through every bull and bear market that we've had in Bitcoin, I've paid low prices and I've paid high prices. Back in 16, 17, I bought Bitcoin at as low as $400 and as high as $16,000, and then watched it go down to $3,500. In the previous market, I got Bitcoin as low, I think maybe 8 or 9K back in 2020, and I think I paid as much as 60K. Watched it go down to 15, bought more Bitcoin, 18, 19, 20, 22, 23, 24, 25, and here we are up at 62. So again, the beauty of an asset that you can get into early in its adoption cycle is that even if you have truly terrible timing, you can still make money. When we get off this video together, you should take a look at a long-term chart of Microsoft. From 1986 to the year 2000, you could have bought Microsoft at its high every single year and made money. There aren't many assets that you can do that with. Now, the same is true with Bitcoin, but the adoption of Bitcoin is still very, very, very small. You have to remember that this is the first year that Bitcoin was made available to the traditional financial system in a way that they could own it at scale without running afoul of any of their regulators. And that is a big, big deal. If you want to get a glimpse as to where this whole asset class is going, you have to look at Bitcoin, which is why I talk about Bitcoin so much. Because as Bitcoin goes, so goes the asset class. And so something that I've touched on before that I want to bring to your attention again is Bank of New York Mellon. So Bank of New York Mellon is, I think it's the oldest bank in the United States. If it's not the oldest, it's very close. Bank of New York Mellon is one of the most important banks in the world. And the reason why is because it acts as a custodian to one of the single largest pools of capital in the world. They custody $43 trillion in capital. That's bigger than the annual economic output of the United States. $43 trillion. And they've been around for almost 200 years. So you don't get to survive for that longer period of time by making dumb moves. You don't get trusted with holding more wealth than just about anybody else in the world unless you have immense credibility. Now, why do I bring this up? I bring this up because BNY Mellon received a special waiver to custody Bitcoin without having to put up additional capital. So this was a rule that the SEC put up, SAB 121, which said that if you custody Bitcoin, you custody $1 billion worth of Bitcoin, you got to put up $1 billion of your own capital. Well, they removed that rule for BNY Mellon. Why does that matter? It matters because it means that the largest, most trusted custodian in the world says, we want to be in the Bitcoin business. We want to be able to custody Bitcoin. That means that not only are they going to custody Bitcoin, that they're going to get behind creating Bitcoin products. Or, at the very minimum, they are going to act as custodian for other firms that create Bitcoin products. Now, it could be options, which are coming. It could be other derivatives types of contracts that are coming. And as Bitcoin goes, so goes the whole space. Now, you might say, well, how do we know this isn't a fad? First of all, BNY Mellon is not a company that would enter the Bitcoin custody space lightly. You don't survive as long as they do in banking. Think about all the great banks that have gone out of business over the last 100 years. Forget that, over the last 20 years. So you don't get to survive by making impulsive, rash decisions. The other thing I want to bring your attention to, and I'm just going to move the camera here while I read this. It says, BNY Mellon CEO Robin Vince, the CEO, described digital assets as the bank's longest term play. I want you to really, really think about that. Those of you that have been with me since 2016, do you remember the abuse that we would get when I was talking about buying Bitcoin and buying digital assets, and how people said that we're facilitating money laundering and gun running and all kinds of manner of illegal trade? You now have one of America's oldest banks, one of the largest custodians in the world, that's all in on digital assets. Can you see how early we are? Like, can you really understand how early we are in this adoption cycle? And you can begin to understand why the volatility doesn't faze me. Look, I can do this broadcast with you right now, and tomorrow Bitcoin can drop 50%. It's just the nature of the asset, and it doesn't matter. Nothing can stop the adoption of this asset. The way that the incentives are aligned within Bitcoin are so beautiful and so self-reinforcing that if you put the intellectual energy into really understanding what Bitcoin is and why it has value, you will allocate part of your capital to it. And the beautiful thing about Bitcoin is that it's truly limited in supply. There will never be more than 21 million. So we have never had an asset in the history of humanity that I know of that had a fixed supply where we can say that over time, just about everyone that has money will allocate a portion of their money to this particular asset. And so that's why the volatility has never really bothered me. I mean, sure, I have an emotional response to it, but I've never thought, oh my gosh, I'm not going to be able to get out of this situation, because I have always placed my faith in the incentive mechanisms within Bitcoin that are going to continually attract capital to it. And so I think if you continue to do that, it is going to put you in a position where no matter what happens with volatility, you are going to outperform pretty much any regular asset. I believe by the end of this decade, and it's probably going to happen earlier than that, but by the end of this decade, the aggregate value of Bitcoin will mirror that of gold. And if that's correct, Bitcoin will be somewhere around $600,000 or $700,000 a Bitcoin. That's a 50% compound annual growth rate between now and the end of the year. There's no other asset I know of that can offer that type of return. Now, will that return be linear, meaning 50% and then 50% and then 50%? No. It won't be linear. It might be 300%, then down 50%. It might be 400%, then down 75%. That's just the way these assets move. They're not linear assets. They don't move up in a steadily predictable way. And one of the mistakes that we make as investors is we confuse volatility with risk. And they're separate. Risk, you can have a low volatile asset and it be incredibly risky. WorldCom, Enron were low volatility assets. Lehman Brothers were low volatility assets, but they were incredibly risky. Bear Stearns was a low volatility asset, their stock, but it was incredibly risky. Bitcoin is a wildly volatile asset, but I don't believe it's a risky asset. We know, okay, what are the fundamental risks in Bitcoin? The biggest risk in Bitcoin is there's some unexplored flaw in the computer code that governs the protocol. That's certainly a huge risk that everybody should be aware of. But here's the thing. Bitcoin has been running 24 hours a day, 7 days a week since it went live in '08, '09, and it has been attacked mercilessly. Every single day, the Bitcoin code is attacked. Every single day, you have governments and you have private entities and malicious entities try to attack this network, and it survived. It's the most secure computer network in the world. My point is that nothing is without risk. So you have to look at what the risk is, but don't confuse volatility with risk. Now, we need to manage volatility because we're human beings, and we have a tendency to make stupid decisions. So we manage the volatility through position sizing. We say, okay, I have an asset here that can drop 50% in a day, literally. What's the most I'm willing to put into that without panic selling should that take place? And then you make your decision as to what you can allocate to Bitcoin. I think you should have at least 1% of your net worth in it, up to 10% of your net worth in Bitcoin. And I don't know of it. I mean, you could literally have your investment portfolio could literally be 10% Bitcoin, 90% government bonds, and I think over time you're going to outperform just about any hedge fund manager in the world. Again, why do I talk so much about Bitcoin? Because the adoption path of Bitcoin is what blazes the trail for the rest of the industry. And as Bitcoin goes, so goes the altcoins. Now, where will the biggest profits be? It won't be in Bitcoin. It will be in the altcoins. And for those of you that work with me in my premium newsletters, you know where I think that's going to happen. And I will keep you abreast of that, of course, in my paid newsletter services. But if all you say, oh, I don't want to buy your newsletter, that's fine. They're expensive. I get it. Then just buy Bitcoin. Just buy some Bitcoin and leave it alone. It's going to outperform just about anything else that you own in your traditional asset portfolio. It'll outperform bonds. It'll outperform equities. I believe it'll outperform private equity. Plus you have liquidity, which you don't have in private equity. And it will probably outperform most commodities. Question is, can I start holding a crypto that is worth less than $100? I think what you're asking is, can you get started small? And sure, an oak tree starts with an acorn. So I've always talked about, you can just dollar cost average into Bitcoin. You don't have to buy a whole Bitcoin. You can buy $10 worth, $20 worth, $50 worth. You can buy it each week, and just keep stacking. The question is, do I see them lending Bitcoin? BNY lending Bitcoin? Yeah, there's going to be lending markets for Bitcoin. There's going to be all different types of markets for Bitcoin. That's just one area, I believe, of what their business is going to be. Okay. I don't believe in levered Bitcoin. I think if you want to get exposure to Bitcoin, buy Bitcoin. I know a lot of people will buy MicroStrategy as a levered way, or maybe STX as a levered way to own Bitcoin. I think you just want to have a core stack of Bitcoin. And then if you want to go further out on the risk curve, then I think that's where altcoins come into play, where you can just put a few $100s into a bunch of different altcoins, and they have the ability to have explosive moves. If you're looking to get more exposure to Bitcoin, then I think just buy more Bitcoin. I'm wildly bullish on meme coins. Yes. They're going much, much higher. Question is, what's my opinion on XRP? Look, I've recommended XRP in the past and made a ton of money for my readers on XRP. I've always viewed XRP as something to trade and make money with, but I've never really been bought into the project, if that makes sense. So in the past, there would have been stocks that I hated the company, hated the management, hated the business, but they made sense to trade because of either the entire group was going up and they had a good looking chart and they were going up, versus stocks that I loved and liked and would be happy to hold through multiple cycles because I knew that they had a good core business and would survive over time. Can I say that's true for XRP? I don't know, but it certainly has been a very good trading vehicle. This is a very good question. When do you think retail customers will be able to custody our BTC at a bank and get a loan against it? It's going to be a few years before that type of lending market comes about. I think the next step of adoption is we will have American pension funds really get big into Bitcoin, American banks. Then there will be the first round of lending and borrowing products will be for that market, will be for the institutional market. And then once that's developed, then it will roll out to the market for individuals. But I think it's a few years away. Maybe the next market cycle or the cycle after that. I mean, 4 to 8 years. It's going to be a while. Okay, let's have a look. So the question is, I guess with liquidity coming in from China and USA bull run in 2025, I mean, the whole world is pushing the liquidity button. China, the United States, Europe. It remains to be seen if Japan will punch that liquidity button or not, or if they will just slow their pace of raising rates. But liquidity is coming, guys. Like massive global liquidity is coming. And it is going to send Bitcoin up, and it is going to blow up the meme coins to the moon. It's these staking coins, as the convergence starts to unfold, are going to explode higher. There is going to be a massive bull market in 2025, and the time to position for it is now. When people are bored, when people are scared, when people are focused on wars and they're focused on, are we going to have a recession? Are rates going to come down as much as we think they are? When everybody is all in their own head and not paying attention, that's when the money is made. That's when the money is made. Okay. Question is, do I think ETH will hit 10K this cycle? That's a great question. Up until a few months ago, I would have said absolutely. However, with the divergence that I'm seeing with Solana and how the Solana development is moving and how developers are moving to Solana, I think that Solana is going to radically outperform ETH. So ETH will at least, ETH will make a new high from here. Maybe we have 7,500 in the cards in a raging bull market. I think 10K is going to be tough. I think that a lot of the capital that would have moved into ETH is going to move into Sol. And so I think you need to overweight Sol over ETH. You still want to own some ETH because, look, it's still the second largest crypto in the space. It has an ETF. There are going to be products built around it. But you've got to look at where the developers are going, and the developer activity on Solana is dramatic. It's dramatic. And so this is another very important thing. I'm glad you brought this up. So I'm in the position where I have to give you my best thinking in that moment. And there are times when facts on the ground change, and I need to be able to make that shift and make that pivot. And a lot of folks, professional and non-professional, their ego gets involved and they're like, oh no, I said F's going to 10. I can't backtrack on that. Well, here's the thing. I have my own money in markets, and so I can't afford to have a fixed point of view that doesn't change when the facts on the ground change. So when the facts on the ground change, you better change your point of view. You got to put your ego aside. And if people don't like it, then they don't like it. But people that work with me know that I'm going to give them my best thinking in that moment. And if things change and I have to adjust my thinking, I'm going to be absolutely forthright with them. Whereas a lot of people won't. They get caught in this trap of, oh no, I'm just going to hold on to what I believe, even though I'm seeing evidence to the contrary. And you can't make money like that. And at the end of the day, I'm here to help you make as much money as possible without putting your current lifestyle at risk. That's my goal. If I can't, continue to move the ball down the field for that, for you, then I just won't do this anymore. But I still think I have a lot of value to add in that space. So it's very important. It's a key lesson that you should take away. When the facts change, you need to adjust. Because if you don't, you get left behind. And what I think will happen is I think that while ETH will do well, I think Sol will do a lot better. I think the relative outperformance will be dramatic, which is why I think you should over-own Sol versus ETH. Does that answer your question, Gabe? The question is, what do I see for the rest of the year? I'd be guessing. I'd be guessing. what I would say is that if you have a trading stack, buy the dips, sell the rips, and for your core stack, just get long. Because I think a year from now, the prices that we can buy most cryptos at are going to look ludicrously cheap. And again, there was a question here about, Sol and volatility. Who cares about the short-term volatility right now? It doesn't matter, right? So let's say you buy Sol today and it goes down 15 or 20% tomorrow. Based on where I think this is going to be next year, it doesn't matter. It doesn't matter. Okay, all right, friends, I want to thank you so much for tuning in today. It is always a pleasure chatting with you on these IG Lives. I want to thank you very much for being here. And as I always like to say, I want you to always remember, let the game come to you.
So that concludes today's episode. Thank you for listening. We'd love to hear your thoughts in the comments section. You can find the show notes on www.tikatiwari.com. If you found this episode helpful, please share it with others, talk about it on social media, and leave a rating and review. Don't forget to subscribe so that you never miss another episode. Thanks again, and we'll see you next time.